Alright, gang, it's your boy Nature, aka Nature. Gang. Alright, gang, so we're back for another video. More videos about your psychology, to help with you when it comes to trading, being profitable in this market. Forex is all about your psychology. So this is more psychology. And we're going to be doing candlestick patterns. This kind of wraps up candlestick patterns as well, though. But we're still we have to put everything together. So, we're going to use candlestick patterns as well. But it's more about your psychology. All right. I understand how Forex is. I understand that, Forex can be boring. I understand, Forex can be boring. You're just looking at, chart patterns, the whole time, candlestick patterns the whole time for hours and hours, at least for like an hour or two. It can be boring. And I hope these videos help with your psychology. So, all right, gang. So trading can be boring. Okay, trading can be boring. It's more for your psychology. As you can see, we're in an uptrend. We are in an uptrend from take profit 4. If we scroll back 1 to 15, we're in an uptrend from take profit 4 all the way up to, prices are now at, we're still in an uptrend. I'm going to explain this again. We're still in an uptrend all the way up to take profit 3. So we're in this uptrend and price went all the way up to take profit 3. Gang. Finally see price break above take profit 2 and price goes up to take profit 3. So understand how Forex can be. Like, this move did not happen until February the 4th. And this is the trade that he was trying to swing trade. Gang. He was trying to trade this trade right here. And it didn't happen until February the 4th. This week actually, this week of February 2022. This move did not happen until February the 4th, going into February the 6th, February the 7th. This week, as you know, it's February the 8th now, 2022. This move did not happen until this week. It did not happen until this week, gang. So you're trying to swing trade this right here, and being in Forex, what they say can be boring. It can be boring. As you're looking at chart patterns the whole time, and boredom does come up in charts, and when you're looking at charts, you start to get bored and you start trying to overtrade. As we scroll right here, boom, on a 15, you start trying to overtrade. We're in an uptrend. You could have gotten a great trade 1 and great trade 2 and rode it all the way up to take profit 2, boom, and you're in a trade, and you're in a live trade with your live money, and prices, it took all these candlesticks represent 15-minute candlesticks. So from February the 2nd all the way up to February the 3rd, it took a day. It took 1 day. All these candlesticks represent 1 day, as all these candlesticks represent 15 minutes. It took us 1 day to get all the way up to take profit, all the way up to take profit 2, from February the 2nd to February the 3rd. And you start getting bored. You start getting bored. You got in that great trade 1 and great trade 2. This is where you make the most money at the bottom. And your psychology has to be, it's extremely important. You start getting bored, looking at charts, and you start over trading. You start over trading, you start over leveraging, you up in the lot size, and you get in at the middle of an uptrend when you had the trade already in place at great trade 1 and great trade 2. You get in at the middle of an uptrend, you place 2 more trades in, and you up the lot size. um and you decide to add 2 more trades at the middle of an uptrend where you lose the most money at. This is where you lose the most money at. As you can see in the past, from February the 1st, price can shoot back down and stop you out of this trade. You got in, same thing here. You was at great trade 1 and great trade 2. You got bored, and you put another trade in at trade 1 and trade 2, and price shoots past all your trades. Sorry about that. I don't know what happened to my chart. It's just acting weird right now. Let's go back. Cool. Yeah. Oh, right here. As you got in this trade at trade 1, at trade 2, when you had already got in at great trade 1 and great trade 2, and you could have rolled all the way up to take profit 2, you place another 2 more trades, and trying to swing trade this, trying to because you're bored and you want the thrill of trading, the thrill of trading of getting rich overnight, and you can't, you're not gonna get rich overnight, just expecting to make 10,000 to 100,000, 50,000 your first night. Like that takes time, and you're over trading. You got 4 trades going on here. Same thing here, and stops you out, gets you out of trade 1, trade 2, and the broker takes all your money. Um, Same thing here. Same thing here at Great Trade 1 and Great Trade 2. You're in it. This is where you make the most money at, and you're getting at the middle of an uptrend. You place 2 more trades, and you decide to add 2 more trades because you're bored. You're bored looking at the charts. Forex can be what they say boring. Um, and you're looking at the charts all day, all night. You're up at 2 o'clock in the morning, 3 o'clock in the morning, all the way up until like 10 o'clock, noon. 12 o'clock, noon. That's when price starts to like kind of slow down. And you're up this whole time from 2 to 8 to like 12, and you're placing in more trades, doing unnecessary trades, and you can lose a lot of money in Forex because Forex is a real market. This is for all your psychology. Forex is a real market. As you place a trade in at trade 1 and trade 2, it consolidates. Once price goes to take profit 2, it will consolidate before what? Reversing back down, or price can head back up. Price can head back up. You can see consolidation here, and price heads back up to take profit 1. But here and here, when price gets to take profit 2, it consolidates and heads back down. Same thing here. It consolidates and heads back down. Boom. Past even Great Trade 1 and Great Trade 2, and gets everybody out this trade. And you lose all your money as you're in a live trade, trading with your live money. And this is actually a live market, and you're actually trading with your live money. A lot of factors come in play when you're actually trading with your live money and you're actually in this market trading. I've been in trading for 3 years. A lot of factors come in when you're trading live, when you're trading actually with your money. And you're trying to swing trade this. You place 2 more trades because you want the thrill of gambling and getting rich overnight, and doing 10K and 20K, which you can do, with practice, and your psychology has to be right over time. You can get to 10K, 20K a night, 30K, 50K, 100K in 2 to 3 nights. That can happen. But I'm trying to give you as much videos as I can about your psychology to help you stay disciplined. As you got in at the middle of an uptrend, and this is where you lose the most money at. At Great Trade 1 and Great Trade 2, boom, when you should have just took the profit. You got in at the middle of an uptrend. You have to take the profit at take profit 2. From take profit 3 to take profit 2, from 1794 all the way up to 1810. Boom, get out the trade. Get out the trade all the way up to 1810. Boom, get out the trade. As I'm trying to avoid you from losing money in this market. I'm trying to give you as much psychology videos as I can to help you stay disciplined. Like, you have to be disciplined. Get out the trade. Like, you couldn't have swung trade this trade. This wasn't the trade to swing trade. And what does price do? It consolidates. Boom, gives us an even star pattern, some type of candlestick pattern. That's why you have to take the trade and be extremely patient with this market, as price can reverse back down. As you can see, price can reverse back down and does reverse back down. As you see, price reverse back down, consolidates at take profit 2, and then reverses back down, starts to reverse back down, and reverses all the way back down to take profit 3, past take profit 3, all the way to 1788, getting everybody out this trade, as the banks and the market will do this, get everybody out this trade. Before heading back up in the overall direction. And you could have just waited a day from February 2nd to February the 3rd. That was one day you had to wait. But who wanted to wait that long? Who wanted to wait a day to get in? And you're trying to place trades here and here, and you think price is heading back up, and it just shoots all the way back down and takes all your money and stops you out. And you eventually get stopped out, and you're like, oh, Forex is a scam. Well, no, Forex is about your psychology. You have to have discipline and be disciplined. You have to understand price is consolidating. Boom, price is going to reverse back down, and it does. It reverses back down all the way to 1788 and gets you out of this trade. So trading is extremely, like, having a trading plan is extremely important. All right, gang.